Let's invite Abneesh Roy, Executive Director, Nuvama Institutional Equities, now on the show. Abneesh, very strong numbers coming through on Lenskart. There were so many naysayers around the time of the IPO saying valuations are very high, but compared to the IPO price of 400, the stock has moved up to 560, and now even the numbers are very strong. That operating leverage is playing out. How have you analyzed Lenskart's numbers, and what is your target price?
So we don't cover Lenskart, but clearly Titan, Britannia numbers were very strong. So these are some of the names. Definitely the results were positive. And we do see even Q4 strong trend continuing in Britannia, Nestle, Titan. So those are the stocks where we have a high conviction buy. So we continue to see that even Hindustan Unilever, the results will come today. We see that Q4, the momentum will further accelerate. Q3, clearly HUL saw the October month GST transition, but November and December, there was a recovery. We expect around 3% kind of a revenue growth and 2% volume growth in Q3, but Q4, we expect acceleration. So we are seeing some improvement. We had the conference last 3 days, and clearly we saw that most companies were expecting the recovery to sustain.
So for HUL, because this will be the first full quarter of GST cut, and you're saying November and December were good months. So volume growth, 3% for the current quarter. How much does it accelerate in Q4?
Yes, Q4, our sense is we should see around 5% volume growth. We are obviously yet to release our preview given the quarter is still ongoing. But we are seeing that in Q4, the GST transition impact will not be there. The real GST benefit in terms of grammage is there in the lower unit packs. So clearly in soaps business, both Hindustan Unilever and Godrej Consumer are now seeing growth coming back. In tea also, the margins are improving. The raw material side is favorable. So we are seeing that in Q4, the 5% kind of volume growth is something we are expecting currently. And we are seeing the aggression of the new MD also. And we are seeing that lower unit packs, clearly the GST benefit is there. If I have to summarize, the highest GST benefit is clearly for Britannia and Nestle, because in those food products, clearly 5 rupee, 10 rupee, 20 rupee kind of price point is there, and the grammage addition is really helping. In rest of the FMCG also, clearly the LUPs are benefiting. So HUL also benefits because of that.
Hi, Abneesh. Good to see you here. Abneesh, what about ITC? All the bad news in the price?
Yes, our sense is all the bad news is done and dusted. Next 2 years, we don't expect any big increase in taxation given the very high taxation increase this time. Yes, companies, both the top 2-3 companies have taken the cigarette price hike. And our sense is next 2 to 3 months, you will see more rounds of price hike, because in such kind of scenario, companies don't take entire hike of the portfolio at one go. Even in FMCG, ITC has done extremely well. In biscuit, it has seen a 15% kind of revenue growth in Q3, and overall double-digit sales growth is something we expect in FMCG to continue because of the GST benefit. Even in agri, we do see recovery happening in FY27, and paper, the merger will happen. So yeah, it's a stock where you will see next 1 or 2 quarters a lot of concerns on the cigarette volumes. But overall, as a company, I think at this price, the price value equation is favorable from a 1 to 2 years perspective. It is not our top pick, but yeah, worst is behind.
Yeah. Abneesh, this Zomato and Swiggy, any thoughts?
So again, that is covered by the internet team. So I will be able to comment on the FMCG and Titan.
Yeah, no. Got that. You know, the jewelry stocks, right? I mean, they've all, in a way, re-rated. I mean, they've done very well, right? With the sharp rise that we've seen in underlying metal prices. Volume growth, though, has been coming under pressure. What is your sense on volume growth specifically, if say, gold prices were to stay around these $5,000 levels?
I think it's a fair question. You are absolutely right. Titan stock has come back in terms of interest, and clearly very strong numbers we saw in Q3, 37% revenue growth and 34% kind of EBITDA growth. So clearly the consumption behavior is very clear. That customer, when he goes for shopping a jewelry, he has a budget in mind. So 2 lakh, 5 lakh. So based on the gold pricing, the grammage adjustment happens. So in this kind of a segment, you will need to see the budget rather than the grammage, because he doesn't buy a grammage, right? So I will say that that's okay. But yes, if the gold price correction from the peak, there has been some correction. And if we to see the sustenance of that, my sense is again, the price value equation will adjust, and we'll see the volume growth coming back. But ultimately, you have to see the revenue growth, store expansion. The margins also have done well. CaratLane did quite well. So we are positive on Titan, and clearly we'll see more of the revenue growth rather than the volume growth as the real metric to evaluate.
Okay. All right. Final question. Abneesh, before we let you go, we had Birla Opus that came out with a set of numbers yesterday. That's via Grasim. They have been talking up in terms of, they're growing at 3x what the industry is growing at. They're holding 20-25% of the capacity share right now. How do you see the paint companies play out from here on? Asian Paints, not done much in the last 2 years. In fact, the stock is a little bit lower. There was some talk that maybe the biggest threat from the new entrant is now behind and things should look up. What is the preference and what do you make of it?
Oh, yes, we expect Asian Paint to report around 11% volume growth in Q4 at this juncture. So there is a recovery because if you remember, in Q3, the October month had the rains which was impacting, and the gap between the rains ending and the Diwali was very low. So that did not give the consumer to really paint his house before Diwali, which was a issue this time. In Q4, we are seeing recovery because all the 3 months we don't have any October month kind of a impact of the rains, etc. Coming to Birla Opus, you will see that in Q2 the numbers were on the weaker side, and that's why the sales growth is there. But frankly, for a startup company, comparing a growth 3x of versus a legacy company is not the right metric. Because you will see in Eastern India, for example, Birla Opus has added more distribution, the factory came. So you'll see that. And it was a softer base in Q2. I think clearly Asian Paint is aggressive. Birla Opus has taken that price hike of 2% to around 5-6%. So that is also a demonstration that even the new players are now going towards a more rational strategy. And clearly in terms of the 10% extra MLH, we see that 4 liter already it has been reversed. So we are expecting that also to pan out. So you will see that, yes, overall, there will be quarters in which the new player will grow faster. But ultimately, you have to see the longer time frame, last 3-4 quarters. If you see the new player has been in a tight range. So some quarter, you can see the quarter-on-quarter growth. But ultimately, you have to see longer term trend and YOY. So we remain positive on Asian Paint. Our sense is around 11% volume growth will come back. And in terms of margins, frankly, TiO2 and crude oil remains a favorable thing. So we are expecting margin improvement to also continue.
All right. Thanks very much, Abneesh, for that. Good conversation as always. Thank you for coming on and joining us here on CNBC TV 18. 9:10 calls. Sudarshan and Mitesh.